down. So we look at your second chart, just looking this morning, 78.50 a barrel for Brent crude right now. It had been as high as 81. What is the impact of that on what people pay at the pump?
It's already having an impact on what people pay at the pump. So you can see here, oil prices were actually rising a bit already for a variety of reasons, including the tensions in the Middle East that scared the markets. But then, of course, you had this big jump, as you just articulated, Willie, and that has already turned into higher gas prices. You can see this line is gas, this reddish color line. The blue line is crude oil. And you can see that gas has already gone from $2.98 to $3.11 just in the last 4 days across the country. So that's the bad news. The good news for us is that we're not going to see gas lines again like in 1973, because we have gone from being a huge importer of oil, net importer of oil, to actually being a net exporter of oil. We import some, we export some, but on balance, we export more than we import. So supply is not our problem. But because oil is a worldwide commodity, it trades at a worldwide price, we do feel the impact on prices, but we shouldn't feel the impact on supply.
All right, so let's move to your third chart, which gets at inflation. Obviously something that's been a persistent problem, but this obviously not helping with that either.
Right. And remember, it's also not just gasoline that goes up in price. It's everything else that comes from petroleum, which includes jet fuel, home heating oil, things that go into petrochemicals that are made from petroleum. So there could be a significant inflationary impact. This is what the market expects inflation to be. And you can see, again, it was already moving up. The economy was a bit stronger. Oil prices were moving up. Then it looked like it was easing off, and now it's jumped again up here. It's gone up about 0.15%. Doesn't sound like a lot, but it's going in the wrong direction. But the bigger impact of that, or a big impact of that, is on expectations for interest rates. Because the Fed has a 2% inflation target, when it goes up like that, people expect interest rates to remain higher for longer. So just in the last few days since the attack, interest rates have moved up as you can see here, from the yellow to the red. And so as you also see, the stock market has been wobbly. Why has the stock market been wobbly? Partly, obviously, because of all this international uncertainty, potential for a wider war, et cetera, but also because higher interest rates are the enemy of stock prices, because they provide other places for people to put their money besides stocks, which then puts pressure on stocks. So all of this is part of why the stock market has been so wobbly in the past few days. And of course, higher inflation and remaining so far above the Fed's inflation target is also worrisome for economic policy.
Steve, Wall Street clearly does not like unpredictability or uncertainty. No one does. But on the global stage, there's no way of telling how long we will be actively involved on a daily basis in a war in Iran. What happens if this war lengthens out in terms of the United States' presence and participation in that war? What happens to those charts behind you right now?
A lot of bad things, Mike, a lot of bad things. The oil prices could spike some more. As I said, I don't think it affects our supply, but it affects the prices people pay at the pump and for their home heating oil, and even for their natural gas, because a lot of natural gas also passes through the Straits of Hormuz. And so then you get more inflation, you get the potential for higher interest rates, you get the uncertainty and the fear of what could happen. And yeah, all that is really bad for the stock market. The stock market's reaction so far has actually been quite muted. It was down about 1% yesterday. It looks like it'll open about flat today. That's a pretty benign reaction given everything that could have happened. But the potential for a much bigger stock market disruption is certainly right there if this war were to widen out, or if something unexpectedly bad were to happen to us, to our troops, to the whole Middle Eastern situation.
And these things